1,300-point bear divergence. Let me explain, guys. 13 months ago, banks were going belly up. SVB, do you remember? Yeah, bought too many government bonds. Holy shit, who would think government bonds are unsafe? Well, SVB was taking too much money from technology companies that needed to put it somewhere, so guess what them idiots did? They bought government bonds. The safest fucking investment. U.S. government bonds. And they got fucked because at the moment they needed to liquidate those positions. They were worth 30-40% less than what they fucking paid for them. So if you're trading and you're like down 30-40% in your trading options, guys, it's just as good as investing in U.S. government bonds. Damn it. That's how SVB got taken out. They put billions of dollars in U.S. government bonds and they got fucked. And then a few other banks got impacted by it. And guess what? They got rescued. So if you rewind this back to 1929, guess what? Well, back then, okay, the Fed and the government, they took too fucking long to come up with a solution. They took too long to inject some money in the economy. They took too fucking long to come to rescue to the stock market. Well, fast forward 1987, they were a lot quicker. Within 3 days, okay, this whole fucking 30% crash was done and over with, okay? And now they are even faster than that. So on the day, today, March 6, 2024, Powell is giving a speech. And he's talking some wild, crazy shit. He's like, hey, there's no reason to cut rates. Guess what? It is the same fucking guy who was telling you years ago it was too early to raise interest rates. I mean, the truth is, this guy is clueless. The Fed is fucking clueless what they're fucking doing. The very first video we recorded here at 13 Market Moves on the 1st of this year, 2024, was titled Stagflation. Stagflation means inflation actually goes higher while the rest of the economy slows down. Your unemployment rate goes high. Okay, people getting laid off, the number of those people goes high. I mean, the statistical things that the Fed normally keeps track of, such as the PMI and the CPI, all this shit goes to shit. Okay, so basically that's exactly what we're getting, but yet nobody's out there saying, hey, this is fucking stagflation. Okay, it's only 13 market moves that has brought to your attention since the beginning of the year. 2024 is like same as 1973, 1979. Okay, if we to trade the fucking historic analog, guys, this is a magnificent 1,300 point deviation for where the market is going to be trading like 9 months from now, 8 months from now, guys. This is wild. This is one of the biggest short selling opportunities of all fucking time. But let's actually talk about what fucking happened today. So I mentioned how in 100 years ago, it used to take a lot longer to fix a problem. And in 1987, it only took 3 days to fix the crash. The Fed comes to the rescue, injects liquidity. I mean, we've seen how fast the Fed came up to the rescue during the COVID crash. Okay, it was lightning fast. Fucking billions. Let's just give the fucking people the money. I mean, it's billions of dollars injected in the economy. Then they're surprised again the fucking inflation, all that kind of shit. But that's not the subject of this video. I just want you to understand that it used to take a lot of time for Fed to act, and now they're super fucking fast. They basically 13 months ago, when the market was trading 1,300 points below, we're talking about the 3,800 level in the market, when all these banks were going belly up, okay, as a result, it was a domino effect of the meteoric rise from 0 to 5%, all the banks that were heavily concentrated and had U.S. government bonds as basically their investment, those bonds deteriorated in value to huge proportions. And so if you had a bank run, you had to sell those assets, which were basically 30 to 40% less than what you paid for them. And no doubt, I mean, how are you going to return customers' deposits if you're down 40 fucking percent? So therefore, SVB went out. There's a few other banks that went out that would have actually gone out unless Fed negotiated some kind of deal to help them out. So, and they came to rescue real lightning fast. And those banks that were dropping 13 months ago, they basically got the other banks, the bigger banks, to come to a rescue, inject like a couple of $1 billion, each one of them chipped in. And so there it is. It was over. It was over before it started. But I think now the domino effect that we're seeing now in NYCB Bank, it is much more meaningful because it tells you that what the Fed was able to patch up 13 months ago, okay, and temporarily hide all the ugliness of what was taking place, okay, the delay effect is about to hit the market. You're about to witness the biggest fucking delay effect in the market history. And, clearly there was a deal put together to save NYCB Bank today, okay? But there's a much greater message to understand here. Fed can come to a rescue. Fed can influence some banks to put together $1 billion, $2 billion to rescue some other banks. Okay, they can influence all these deals and make it seamless. Like, hey, there's not a problem here. Until the problem becomes so big, right, to where the Fed cannot masquerade it, okay? If there's like 5 banks that are going out, yeah, it is reasonable for other banks to pitch in and save those banks. But now, if we go from single digits to like double digits, and now we got, 15, 20 fucking banks, 30 banks that are facing the same issue, which, by the way, NYCB was not the biggest holder of U.S. government debt, but the root of evil was the same. So it was the meteoric rise from 0 to 5% in yields, which caused the bonds that SVB was holding to drop fucking at the speed of light. And so now it is the same meteoric rise that finally regional banks like NYCB are taking a hit for, that actually is tied to the real estate. I mean, we're talking about fucking apartments in New York. Who could have possibly thought, right, that, a bank could go belly up because they are so concentrated in real estate apartments in New York? That don't even sound right. But that's partially what's happening here with NYCB. So they're coming to rescue, and they've rescued the fuck out NYCB. But guess what? Okay, back in the days, like if we're talking about 1929 times, this fucking bank would have not gotten rescued. Okay, this shit would have dragged out. It would have dragged a lot of other banks in it. It would have been a much bigger headline in the news. It would have been, and NYCB caught quite a bit of attention in the last, 30, 60 days. But what I'm saying is they can patch up a few banks. They can patch up one bank. They can band-aid a problem for 13 months. And it could cause the market to erroneously go by 1,300 points higher. But there is a moment, and I'm telling you that moment is now, March 6th. Okay, the market hits all-time highs when March 1st. We've called it. Fucking market top. We've called it. There's a video out there with a much longer audio version explaining everything. But, guys, since we called the market top, the market's going nowhere but lower. Okay, and basically it's about to roll lower, and we're about to erase 1,300 points of gains on S&P 500 in the next 8 months. So by the end of 2024, I mean, if you look at S&P 500, which now trades at like 5150 on S&P 500 futures. I mean, we're looking now, fast forward 8-9 months from now, it's 3,800, possibly even lower. I mean, I wouldn't rule out the fact we can go to 3,300. I mean, because this entire move is just, it's been entirely based on total bullshit. Okay, it's been entirely based on the ability of Fed to patch up, band-aid things that are a much bigger problem. So they've been able to patch it up for 13 months. But now, okay, you have to be absolutely ignorant, okay, to say that, okay, now we got the same root of evil for the problem that is hitting another bank that is concentrated in real estate. And I'm saying if this ball was to fucking roll over, which I think we're going to see this ball rolling over starting tomorrow. So some of the greatest shorts in the market, I mean, you go short the fuck out of real estate, okay? Because we're probably going to have more banks that are going to come and say, well, due to high interest rates, well, our shit is fucked. Which normally, I mean, this is like the craziest thing. Normally, all the analysts on Wall Street will tell you what? Well, the high interest rates, that's good for the banks. When interest rates go high, banks make more money. It's fucking bullshit, okay? It's a two-sided coin, okay? When interest rates go higher, how many more people go get a fucking loan, okay? Well, there's clearly less people at a high interest rate want to borrow a loan. Why? Well, because if wages are the same, or if wages go 10%, but your mortgage fucking goes up by 50%, are you going to take that mortgage? No, you're not going to fucking do it. Same thing with a car loan. If your car payment used to be $350, $500, now it's at fucking $800, $1,200, like, you're going to, like, seriously, you're probably going to think twice about it. Now, it's tied to the meteoric rise in interest rates. And the crazy shit that NYCB gets rescued on the same day that Powell does a testimony in front of Congress about monetary policy for the last 6 months, and he is just standing there fucking clueless saying, well, we're going to get some more data. We're going to get... Man, what data do you need? I mean, shit is falling apart at the speed of light. You know, okay, Fed is trying to go rescue this business over here and this business over there so it wouldn't spill out in the main media. Why? Well, because fucking Biden is trying to possibly run for another term if he survives for another 6 months. I mean, the dude is like 110 years old. I mean, who the fuck would vote for that motherfucker? I mean, he totally fucked up the economy. All the numbers are fake. All the shit is just, I mean, it's out of control. But yet the market is not pricing it the way it is. The market is pricing it based on, well, the Federal Reserve, they're going to patch it up. Well, the Fed, they're going to come up with stimulus. Well, the Fed is going to do this, and this. And it's true until Fed can't fucking do it. And they can't masquerade shit no more. Fed may be able to come up with a plan to save 5 banks last year, 13 months ago. They may be able to come up with a plan to save and put together and masquerade and present this NYCB deal as a thing of beauty. Oh, well, there's actually value in this bank. We put together this and this and this. It's because it's good for the banks. And temporarily, fucking regional banks go higher in like second part of the trading session. Guys, all the shit is about to fall apart. Okay, you can only masquerade shit for so long, and once we get to the double digits and businesses failing, which could, like, we could get that news as early as tomorrow, like March 7th, March 8th. For that reason, if you haven't watched the Red Pattern 283 video we posted yesterday, just go and check out the videos we posted yesterday on the channel, guys. It is profound. Number 283 pattern is absolutely phenomenal. It tells you that the market between today and Friday, March 8th, okay, could drop by as much as 283 points. Now, in order for that to take place, watch the market first gap down 13 points tomorrow on the S&P 500. And after that, within 2 trading sessions, you get a 283-point drop. God, that is absolutely fucking unbelievable. That is actually something that nobody would even consider if you look at how the market finished the day today. We should have rolled over today, but every day when the market rollover is suppressed, you're due for such a major market move expansion to the downside, okay? It's going to look like a fucking 1987. It's going to feel like 1987 crash. It's going to, like, you're going to be looking at your screen, and most of the traders in the last 4 months, they're used to seeing nothing but green candles. Well, you're about to get used to seeing nothing but red fucking candles. And it is the moment, it's those vivid, pivotal moments in the markets that get you paid. It's the TRO, the trend reversal opportunities. It's when the market reverses from highly bullish to highly bearish. It's when the market reverses from highly bearish to highly bullish. It is those moments, okay? It is us here at 30 Market Moves that posted the first bullish video during the COVID crash. We've nailed the fucking bottom during the COVID crash. And people were leaving comments like, motherfucker, how could you be bullish? The whole fucking market is crashing. It was like S&P was like 2,200, guys. We've nailed that shit. I just don't want you to miss the next big move in the market, guys. The bear divergence is to the magnitude of 1,300 points. The question is, are you going to be a part of it? Are you going to short it with 13 market moves? Because if you are and you're ready for your moment of truth in the markets, okay, then there's only one action you got to take. You got to click the link below this video, okay? Shit is absolutely out of control, and action is required to be taken now. So click the link below this video right now. I'll go to 13mmtv.com, find the big orange button, schedule a call. Guys, get started. This is absolutely fucking phenomenal. This is nothing like you've ever seen before in the fucking history of the stock markets, and I want you guys to be a part of it. Yes, I want you to be a part of it. We're going to take 50 guys to $1 million plus this year, 3 guys to 50 million plus. It's up to you to decide right now. Do you want to be the guy that goes to $1 million plus or 50 million plus? The opportunity is here now. Do not miss this entry. This entry is crucial to your success in the stock market. So don't fuck around. Click the link below. Let's roll. It's your time to take your account to the stratosphere while the rest of the market is trying to buy the dip. It is so much simpler to just short the fuck out of the market. Let's roll.